Hey everyone, this is Kirk here again at Option Alpha, and this is the members only video for Monday, April 25th. I wanted to go over a lot of things over the weekend. I've been doing a lot of reading, of course, trying to figure out what's going on in the market, as I'm sure all of you guys are, and I wanted to give you my general view on where I think things are and could be going. In particular, I want to talk about silver and that kind of bubble and what that's going to have, and then QE2, the ending of that in June, and how that all kind of ties back into our position. So, the first thing I want to go over, and this is a really good quick article, and I think that I want to highlight just the speculative bubble checklist that this guy had presented. I thought it was a really good kind of synopsis of what to look for in a bubble. And mainly what I want to talk about real quick before I get into the QE2 stuff in our portfolio is silver. Now, I've obviously been kind of criticized by a lot of people on some of the Facebook pages, some of the Twitter stuff. Obviously, I've been getting emails about it telling me I'm crazy. But when I get a lot of emails about people telling me silver is going to 60, 70, 80, 90, 100 in the next couple of months, then I know I'm on the right track. I definitely think that silver is in a mini bubble type stage right now. I think that there's going to be a pretty good pullback in silver as we get into the next couple of months. I've actually exited my long silver position much earlier than I thought I should. And then I also got into a just an out of the money put on silver as well, just to try to take advantage of any downside. Now, as far as this checklist, I think it's a pretty good one to go over real quick. And here's the checklist for the bubble. A widespread belief that this time is different, clearly, right? I've been getting a ton of emails about it. I'm sure you guys have all seen it. No, 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 no. Everyone's saying this time is different. Silver is going up because X, Y, Z. Gold's going up because X, Y, Z. This time is different. It's usually not. The grand story theme about pie in the sky, exactly what we're talking about devaluing of the dollar, government debt, which is all true, I believe, but I think it's run its course a little bit too much right here. Widespread publishing by growing speculative ranks, i.e. infomercials, books, mailings, publications, etc., which we've already seen. Leverage. This is the big one that I want to talk about here as well, and I'll get to another chart on net equity accounts I think is pretty good. And then finally, the parabolic price move, which we've already seen and I'll cover as well. So as far as the leverage goes, let's talk about that real quick. And let me just get away from this chart. Okay, here's the leverage chart I want to talk about. This is the NYSE aggregate net equity and accounts. And basically what this is showing here, you can see that we've already highlighted the last kind of top in the market where we had low net equity in the accounts. Is basically this is showing that a lot of traders now are trading on margin. There's a widespread use of margin, meaning that people are going out and buying on margin or selling on margin, whatever the case may be. The fact is they're using more margin. They're using more leverage in the market, and that's never a good thing. This really just shows how extreme people are getting in their risk taking. The fact that they kind of really over assume that the markets will continue up ad nausea for as long as possible, and they're willing to actually borrow money on leverage to invest in the market. Obviously not a good thing. You can see the current reading that we have here, very, very overextended. The next little chart I just want to show you is the Investors Intelligence bull ratio, obviously. Again, we're showing very, very high rate of bulls in the market. Now, again, this obviously doesn't exactly match up top and bottom for everything, but again, the general trend is what you want to see. You see that we have an over amount of bulls in the market, similar to the tops that we had back in 2010, where there's just too many bulls in the market. When everyone's bought up a rally, then no one's left to continue buying that rally, and that's really the important thing. As far as the actual chart of silver, here's just a quick look, and by any stretch of the measure, it's gone parabolic for sure. Rocket ship type move. Nothing looks to stop silver. But I think what's really interesting about silver is, and particularly why I wanted to do this video today and get this out, is that today's volume was astronomical. We had really amazing volume, practically double what we've seen over the last couple weeks, which has been high nonetheless in and of itself. And what's interesting enough about this is that silver practically moved nowhere. It didn't really break any boundaries. In fact, it's trading lower after hours, more than what it gained today. And I think that's really a sign of a kind of blow off top. Now, obviously, I could be completely wrong and silver could continue up higher, maybe to 50. I've read a lot of things about some people saying 50 is the magic target. 50 would be realistic considering that's a round, even number support resistance area. So a lot of people might be selling at 50, but I think that today's volume is really just one of the very, very key signals in this crack in the boat, if you will, or cracking the hull in silver. I do think that the overall fundamentals for silver, gold, etc. are great. I think the dollar will continue to fall for the next couple of years. I don't think that that's the case here, but I think that what everyone's really overlooking is that the dollar has been kind of the easy trade. I mean, really, dumb traders have been making a lot of good money just shorting the dollar. That's really the mantra right now is just if you're going to play the dollar, short it because that's where it's going to go. Same thing with silver. A lot of dumb people have been making money because it's just easy to go long silver and make a ton of money, right? It's going to continue to go higher. And we know that when we get in those types of markets, especially, and I wanted to emphasize this to just the members tonight, is that we get into those types of markets, and that's when you really want to start scaling your positions back. You really want to start looking at risk. Am I buying enough risk protection for the downside? Do I have enough risk protection for the downside? Am I moving my stops up? That's what you really want to look at. I think the thing for silver, and I'm just going to throw up these drawings that I already have on here, and I'm going to compare this to the top in 2000 for the NASDAQ. I think that what we had in silver was this long period of basing, followed by a pretty quick and short move higher, some consolidation for a couple months, and then this one final move higher, okay, if you will. So this is kind of a flag formation, if you will, where you have the flagpole, the flag, and then it just continues almost the same length. Now, many of you know, as I've emailed a couple times to members and some other people, that I actually exited my long silver options here, right where this blue oval is. Now, obviously, looking back on it, they were 40 strike calls, so I could have made a lot more money if I held in there, and I'm obviously kicking myself in the ass for that. But I thought that that was pretty overextended. I have made some great money on silver. I was long from like the 20s. So I think that was a really good exit for me. No harm, no foul, just move on to the next one. But I think that what we've really gotten here is just really overextended. Again, this parabolic move that we have in silver. So again, keep this this chart in your mind. I kind of think that silver is in this type of range over the next couple of months as far as moving lower. Now let's compare it to the NASDAQ and the top that we had in 2000. And you can see here that almost the same type of move happened. You had this very basing pattern, right, where it moved sideways for a long time, just gathering up strength, had an initial thrust higher, then it had some consolidation, and then it had one final move higher before falling off a cliff, in essence, right? So that's what I think silver's in the mood for. This is a very similar pattern. Obviously, it's not going to work out perfectly, but again, this is just really, really good example of patterns continuing to repeat themselves throughout history. You can always look back and try to find some sort of pattern that makes it make sense for your trading. As far as our portfolios go, I think we're doing a really good job this month. Everything, obviously, last month was really good, except for that Iron Condor trade that we had to roll higher. It ended up being a great trade in the end, but who would have known, right? I think for our credit spreads, naked puts and calls, we don't have any Iron Condors right now. We're going to add one of those this week. I just want to make sure that the indexes kind of stay in a very tight range before I start adding that. But I think for the credit spreads, naked puts and calls, we've been doing a really good job. I'm very happy with what we've tried to do here with trying to make trades below the market and let the market rally away from us. Okay, that's been the real key to our success over the last month, and I think is going to be the real key to our success for the May portfolio. I think going forward, however, we're going to start having to get a little bit more selective in our strategy. It's not going to be as easy just to enter all the put options below the market and let the market run higher. I do think that as QE2 ends in June, which everyone is really expecting a pretty good sell-off like we had back in May through August, then I think that we could be in for some downside pressure. Now, obviously, I think that, at least on the S&P and the RUT, the recent highs in May of last year are going to be the most likely area for us to bounce off of. Obviously, not the best area, but the most likely area for the markets to bounce off of. So for the next couple months, after we fully complete these May portfolios, we start building the June portfolios this week or next week, then we'll start to be more selective, entering some call spreads, entering some naked calls, leaving more downside room on the Iron Condors for any market sell-off. I think that's going to be the real key for our portfolios going forward. So as always, I hope you guys enjoyed this video. I wanted to get this video out to you guys. I hope you guys took everything I said for granted, with a grain of salt. Obviously, I'm not perfect. No one is. But I just try to enlighten you guys with a little bit of fresh perspective on what I'm thinking about, what I'm seeing in the market. And as always, I welcome your guys' comments and emails to me to give me your opinion of what's going on. As always, happy trading.